I know you've had a lot more experience than me in the area of preferred stocks. I know that in the time when I was active in the market many years ago, preferred stocks were something we didn't, that was inflationary or consistent inflation. So you would buy into the common stocks or the aggressive stocks if you bought stocks, and even into mutual funds now. Index funds are seemingly a little more popular and better suited for most people.
Yeah.
But in the way of preferred stocks, when do people look at preferred stocks? And I'm sure there are index funds that have preferred stocks in them. So I was just saying, for our investors, we know that the preferred stock generally has preference in terms of payment, but tell us a little bit about that.
Well, I'm a fan of preferred stock. We had a lot of, anybody that weathered the '08 storm realized preferred stocks got hit the hardest. Financials was the hardest hit area, and so we had a lot of clients in preferred stocks. I'm a fan of them. The difference is you've got to be able to weather that storm. I like having them in the portfolio. They're pre-inflation. I think they're a good buy. They're good to keep in your portfolio, but they're going to have some volatility. They're going to pay you the best, but they're going to have a lot of volatility. And the biggest challenge in my own portfolio and others through the '08 and '09 downturn and challenges, we just got hammered on some of those. But if by doing the same thing consistently and buying and maintaining that, the people who maintained that discipline came out of that much quicker than the people who pulled out, tried the time, got afraid of those. So I like some preferreds in the portfolio. I think they're good to have. I think you get them in a good market, and they're going to have some challenges in a hard market, in a high inflationary market.
They do go up and down, but not usually as volatile as the common stock. Is that right?
Yes, correct. Yeah, that's very true. But I think having those, and again, for those that are listening, that just say, well, I don't know what all that is. That's why we like indexes. That's why I put people, for the average investor, and that's not a demeaning statement, meaning you're not in this business and you're not with it. It's what I do if you don't want to have to continually work and stay in it. We like indexes. They're low cost, broad base, and you're getting a good array of everything in your portfolio of stocks. And so doing that gives you a really good spread with a low cost way to invest. So we like those. If you're not out looking to buy preferreds and that's a lot that goes into it, then again we would send you to an index. Find a good index and let that be your investment.
Well, let me remind all of you that this is the kind of subjects we'll be covered in much more in depth at the Wealth Conference that we'll be having in October the 5th and 6th, and we will both be there. But there will be some people there that really are knowledgeable in particular areas that you want to learn, and especially in this ecosystem that we're in right now. It's tricky out there. It's sharp waters, but yet in those waters are the greatest opportunities. We know that, and that we just say that to build confidence. But we say that the American system, free enterprise, still works, but you have to learn how it works, and then you can profit from it.
Yeah, that's very true. And while we're talking about that, I hope that those that are listening can make the October 5th and 6th conference, because as we've said, it's not just that we're having experts, we're having people who have gone through, they have experience. Yes. They've experienced a down market, downturns. They've had loss. They know how to mitigate loss. It's part of their experience, and they know how to make money in downturns. They've got some great experience, and so we're gathering this plethora of really experienced veteran investors in different areas. From got real estate, we've got some people that'll be talking about the cryptocurrency. So we've got risk. We'll have some experts on risk. So if I hope that you can make that, because it'll be a really good time for you to take notes, learn, and be able to interact with people who are really doing this. I hope you enjoyed the broadcast today. I hope there are some things that can really help you to get investing or keep investing. That is our desire here. I wanted to make quick mention of Helpmeinvestcom. Helpmeinvest.com, an organization that we've put together. There's no fees. There's no products to sell you. It is literally designed to help you invest, to become a better investor. So you can go there, set up an appointment for 30 minutes. We'll spend some time with you. We'll go through your portfolio. We'll help you get started wherever you're at. Helpmeinvest.com. I hope you'll take advantage of it. I hope that you will continue to send in your questions. They mean a lot to us because we can talk about a lot of things, but what we really want to do is find out what's important to you, the level of understanding, the questions that you have. So hopefully that we can add value to your investment knowledge and that you can increase and grow in that and stay curious and read as much as you can, get as much information. But when you have a question, please feel free to just send that in to us. Send those questions in because we really do enjoy them and answering them helps us to make sure that we're being relevant and pertinent to you.